Good evening, everyone. Lindsay Dixon in the corner, our CFO, waving. Just so you know, tricky questions, over to Lindsay. Easier ones, send them my way. So from geopolitics to the frivolities of television, that's what we'll offer you over the next few minutes. I'm going to talk a bit about the TV market. I'm going to talk about why our business offers both profit and dividend growth potential. But let me first of all introduce STV, because we're not necessarily a household name across the whole of the UK, or at least outside Scotland, nor indeed a global powerhouse, at least not yet. Anyway, so the simplest way to describe us is as the ITV of Scotland, but with go faster stripes, we like to think. If you switch to button 3 on your TV remote control in Scotland, you get STV, not ITV. So just there, STV, not ITV. Lots of familiar programming, so the big soaps, Coronation Street and Emmerdale, the Saturday night entertainment, 9 o'clock dramas that you've come to love, hopefully, but also with comprehensive Scottish news and current affairs, and our own regional programming representing the whole of the country. We are very much Scotland's commercial public service broadcaster. And we also operate STV Player, which is a digital streaming service which has over 3/4 of the Scottish population signed up as a registered user. And we've recently launched that streaming service right across the whole of the UK. And we run Scotland's largest production company, STV Studios, which has now grown to 9 different creative labels under one umbrella brand, covering the full range of genres, making shows for an increasing number of broadcasters and networks, but also the global streamers as well across the world. And we do that from our bases in London, in Glasgow, and in Belfast. But look, we're a TV company, so before I go any further, why don't we show you a little video that sums us up.
What's going on here? This is my house.
To us.
How did I miss that?
Oh, God.
We may be looking at a ritual murder.
There are calls for an urgent meeting of the UK government to deal with the spiralling cost of living crisis.
Hello and welcome to What's on Scotland. We have got a packed show full of fun for you tonight.
Fantastic.
Good to go.
You both can see exactly what he is.
The big Scottish breakfast is back!
There's a lot of really heavy stuff going on in the world right now. It can be tough to deal with.
Oh, has it always been that shape?
Hello, I'm Ross Kemp, and this is The Bridge of Lies.
I think I might be a superhero.
Is that agreeable?
You must feel something.
A dream come true.
It's not been the greatest time to be called Karen.
So there you have it, some fantastic programming culminating this year in the first ever Winter World Cup, played at Christmas in the desert. I'm not sure what can go wrong with that, but 33 live games we have on STV. Now, we obviously continue to live through extraordinary times, and the seismic events we've all witnessed over the last 6 months, whether that's the war in Ukraine or UK political turmoil, the escalating cost of living crisis, the very sad death of the Queen last week, have once again provided a stark reminder of the importance of public service broadcasting in this country, of giving our viewers trusted facts, information, insight, free at the point of use and available to everyone. And that's exactly what our STV teams have been focused on, with very strong audience results. And because of that, in the first half of this year, we've seen another encouraging operational and financial performance from the company, building on what was a record year in 2021. So total revenues were up 3% in the first half of the year, operating profit up 22%. Within that, all three of our priority growth areas recorded good revenue growth in the first half, with our production business up 16%, our digital business STV Player also up 16%, and our regional Scottish advertising business up 11%. Total advertising across the group was up 4% in the first half. We expect that to come back to slightly down for the first 9 months of September, as we see the anticipated effect of no football tournament this summer in the way that we had one last summer, as well as some caution in the advertising market given the wider economic uncertainty we're all seeing. The ad market is clearly not going to be immune from the economic uncertainty we're all experiencing, though last week's intervention from the government on energy prices was encouraging. As a first step, should help with consumer sentiment, we think. We're also expecting a stronger final quarter boosted by the World Cup, as I say. And there's no doubt that our positioning as a free-to-air broadcaster and digital streamer is a really big competitive advantage during a cost of living crisis. And we see within our audience performance that we continue to perform really strongly. We're in a good position overall as a company, a clear strategy, a strong balance sheet offering real strategic flexibility, and we remain on track to hit our previously announced growth targets out to 2023. And it's against that backdrop that last week our board recommended an interim dividend of 3.9 pence per share, up just over 5% on last year, as we maintain our commitment to paying a progressive dividend alongside continuing to invest for growth. And more than just the last 6 months, when set in the context of the last 3 years, ours has been a story of not just rapid recovery from COVID, but consistently strong execution against our strategic plan, good top and bottom line growth to well beyond pre-pandemic levels, setting what we think are very strong foundations for the next phase of our plan. And that plan is built on 3 strategic pillars and targets. Firstly, maximising our unrivaled strength of our broadcast business. Secondly, driving digital growth. And thirdly, building a world-class studios business so that by the end of next year, at least 50% of our total earnings will come from outside traditional broadcasting, transforming STV into a much more balanced, more diversified media business focused on digital streaming and the ownership of globally valuable intellectual property. And we remain firmly on track to hit those published targets. And this chart just underscores the enduring strength and relevance of our broadcast business, even in a world of multi-screen viewing and peak penetration of the SVOD paid-for services like Netflix. And actually, a quiet revolution has been taking place in audience measurement over the last few months. Our industry currency for measuring audience, called BARB, has started to record not just broadcast viewing, but also viewing to the streaming services, the Amazons and Netflix and Disney Pluses of this world, on a like-for-like basis for the very first time. And the results really are very stark. The pie chart on the left shows that of all in-home viewing in the first half of this year, and that means viewing to all screens, a TV set, a PC, a tablet, a mobile phone, 73% was to broadcast channels and broadcaster video on demand services, nearly 6 times the size of the streaming services like Netflix and Amazon. And within that, STV's share of commercial viewing remains really strong at nearly 30%, as the bar chart on the right there shows, higher than the next 7 biggest commercial channel competitors put together. And it's that scale that's our USP with advertisers, locally and nationally. And you can see from the blue boxes at the bottom of the chart that we continued really to dominate the commercial landscape in the first half. So, for example, we were, in the first half, still the biggest peak time television channel in Scotland, ahead of BBC One, even despite their vast budgets. 99% of all large commercial audiences in Scotland in the first half of this year, so that's an audience of over 500,000 people to a particular show, 99% were on STV. In other words, of the 123 shows that delivered an audience of over 500,000 in Scotland in the first half of the year, we delivered 122 of them on STV, which shows our strength. And this next chart, a bit busy, I know, but unpacks the gulf between the viewing of our broadcast channels and the global streamers, just in a little more detail. Again, based on recent viewing data from the first 6 months of this year. So these are the top 25 rated shows in Scotland for the whole of the first half of this year across all platforms and services. 24 of them were either on the BBC or on STV or Channel 4. Only one of them was on a streaming service, which was a children's film called Turning Red, which was on Disney. Expand that chart to the top 100 shows, and 89 of them were on broadcast television. 37 of those were on STV. Zoom out again to the top 1,000, 889 were on broadcast TV. A much smaller number on one of the streaming services. And that's why you hear us talk all the time about the enduring strength of free-to-air television, because the evidence of what viewers are actually watching and enjoying is very clear, rather than maybe what commentators assume people are watching. You might imagine from what you hear that everyone is watching Netflix every day of the week. The stats simply show that that is not true. And in the middle of a cost of living crisis, that competitive advantage of free-to-air TV, free at the point of use, is only going to get stronger. And you can see from the headlines about Netflix starting to feel vulnerable for the first time, that subscription model is starting to look a little bit delicate. And a research agency, Kantar, very recently reported that in the first half of this year, more than 3 million SVOD subscriptions, so pay TV subscriptions, were cancelled by UK consumers alone. And we see that as only getting more developed over the next few months. In fact, research that we've just commissioned at the end of last month shows that 64% of Scots either have already cancelled or are going to cancel a paid-for service. So turning now to the second pillar of our strategic plan, which is our digital business, and it's been a story of really strong growth for us over the last 4 years, with our STV Player streams more than trebling since 2019. We always knew that the shape of this year's performance would be slightly different, with the first half being a little bit more subdued due to last year's lockdown months. We had a 3-month lockdown in Scotland in first quarter of 2021, and then the Euros football. But half one this year was still our second biggest period ever, and you can see from the chart that the addition of a big football tournament at the end of this year is likely to have a hugely positive effect. And encouragingly, users of our STV Player continued to rise in the first half, registered users up 13%, active users up 7%, and our VIP users were up 37%. And these VIPs are particularly important to us because they are opted into our marketing and communications strategy, meaning that we can fully optimize the viewing and player and advertising experience for them. And the result is that they are our most loyal viewers. So in the first half of this year, those VIP users watched 34% more STV Player content than a more passive non-VIP user. And the key to success, obviously, in the digital streaming market is having the best possible content you can. And there really is a load to look forward to in the second half of this year on our player. As you saw a little bit in the tape, so 10 new network dramas like The Suspect and Karen Piri, which is set in St Andrews, big new player-only dramas, and that means that they are only available on our streaming service rather than on our TV channel, including UK premieres never before seen, the return of big Saturday night entertainment shows like I'm a Celebrity, Get Me Out of Here with Ant and Dec. Some of you must admit to watching that. Who knows? Maybe I'll move on. And then the big one, the Qatar World Cup at the end of the year. As I say, 33 live matches on STV and STV Player. We're expecting at least 50% more live streams to that football tournament than we had even for the Euros last summer. And for anyone concerned that the fact that Scotland haven't qualified might dampen the ratings on STV, fear not. Fear not. Because if you look at, as I have meticulously, if you look at the viewing amongst male viewers to the last 10 World Cups and European Championships, the share of male viewing in Scotland is higher than it is in England, even though Scotland didn't qualify. It is a nation of football nuts. Our biggest show of the year last year, believe it or not, was the England-Italy final of the Euros, though I suspect most people in Scotland were supporting Italy, but there we go. Not me. Finally, in digital, a reminder of where we fit in to the busy global streaming market, because you'd have heard a lot about that in day-to-day life. It's very important we play to our strengths, make sure we have a distinctive proposition given all the competition out there. Our vision is to be Scotland's leading advertising-funded streaming service, as well as a UK-wide destination featuring thousands of hours of premium drama from Scotland, from the UK, but also from the rest of the world. And we do bring a number of competitive advantages here, we think. Hundreds of hours, first of all, of exclusive UK original programming through our partnership with ITV. You won't see anywhere else. We have exclusively in Scotland. A trusted brand and a registered user base, including over 80% of Scottish adults. The ability to promote that digital service on our TV channel, which is the biggest most popular marketing platform in the country. Our public service broadcaster status means that STV Player already secures prominent positioning on many of the digital platforms that may be installed in your homes, soon to be guaranteed prominence on all digital platforms through the government's forthcoming piece of legislation in the media bill. And most importantly, STV Player is completely free and advertising-led, which, as we've said, is a particularly compelling proposition in a cost of living crisis. And that contrasts sharply, I think, with the SVOD market, the pay TV market that we're seeing. And you're seeing on the right-hand side of your screen there that the advertiser-funded streaming market is growing very strongly in the UK and around the world, nearly 40% CAGR in the last 5 years alone. And then moving on to the final pillar of our growth strategy, which is our production company, STV Studios, that makes shows for both ourselves, but also, and more importantly, for lots of other broadcasters and streamers. We're now really making rapid progress there. You see it in the number of new commissions that we're winning, 25 new shows so far this year versus 15 at the same stage last year. In the number of returning series on our programme slate, up to 9, having more than doubled the number since we set out our new studios plan. In our total production hours, which are now north of 250 this year, and in our customer base, which has really expanded dramatically in the last 3 or 4 years from a real focus on the terrestrial names like the BBCs and ITVs and Channel 4s of this world to some of the world's biggest networks and global streamers. We've also announced further material commissions, even since the update that we gave in the summer, a capital markets update on our studios business. 2 more series of our hit quiz format, Bridge of Lies, including a peak time celebrity version for Saturday nights, and that's a big vote of confidence from the BBC for that format. A new bumper 60-episode order for one of our auction house formats, meaning that we'll produce upwards of 300 hours of auction-based programming, believe it or not, over the next 18 months or so, particularly for daytime, and a couple of soon-to-be-announced commissions in reality and in entertainment that show we have real and ongoing momentum in our studios business. And that means we have more shows than ever in production right now across the country. 3 premium dramas, one for Apple, one for Channel 4 and one for the BBC, with the show for Apple in particular, an 8-part crime thriller called Criminal Record, which is filming as we speak in London. That's a huge moment for us as a business. It's due to debut next year simultaneously in over 100 countries on the Apple platform. 7 different entertainment shows that are currently in production for us, including a big new reality show called Written in the Stars for the US streaming service Discovery Plus, and 10 different factual shows showing that part of the business really continues to blossom for us. And crucially, a number of those shows have international format potential, which means we have the ability to sell them around the world. And as a result of that, we are more than on track to hit the targets we set ourselves in our studios division a little over a year ago, in terms of returning series, in terms of expanding our customer base and our revenue growth to quadruple our revenues from under 10 million to over 40 million by the end of 2023. In 2022, we've already secured 20 to 25 million pounds of revenue. The big step up then comes in 2023, when we've already secured 40 to 45 million pounds of turnover and are on track to deliver at least 3 million pounds of profit, as we've previously guided. And then just to finish on studios, again, we're very clear on the vision for this part of the business: to be a world-class producer for the biggest networks and streamers, to be the UK's largest and most successful nations and regions producer, so outside of London. And we've got a core set of competitive strengths that we think put us in a really good place to succeed. Firstly, our base in Scotland at a time of increased production outside of London, a trend that's only going to accelerate with the government's levelling up agenda that you're all hearing about. We have excellent creative leadership and access to Scotland's biggest TV network to help make our new shows famous. We've got a growing reputation amongst buyers, and we also have a low-risk, quite flexible approach to creative partnerships and M&A within the group, with the capacity to invest more in talent going forward as the right opportunities arise. And much of that is about STV Studios winning market share, but as you can see on the right, we also have the following wind of a growing content market behind us in the UK. And so just onto the outlook for the business. As I say, a very strong content lineup on TV and online. The shape of our advertising revenues this year is broadly as we've expected, but clearly TV isn't immune from what's going on in the wider economy, although we have a very strong finish to the year lined up. As discussed, STV Studios continues to build momentum and build profitability. And last week we reconfirmed our guidance that we will hit our profit targets earlier than anticipated. And overall, we remain on track to hit our stretching diversification targets across the group out to 2023. And to leave you just on the key messages, continuing to deliver record revenue and profit growth at STV, propelling us way beyond the pre-COVID highs that we had delivered in the early stages of our strategy. We really have an unrivaled position in terms of our audience as Scotland's largest TV channel and marketing platform in what is a fast-growing video market for consumption. Our 3 key strategic areas of studios, of Scottish advertising and of digital are all growing strongly and profitably for us. And that means we're on track to generate over 50% of our operating profit from outside of traditional spot advertising by the end of next year, up from 36% last year, up from 15% when Lindsay and I started on this diversification journey. And combined with our strong balance sheet, That gives us the reassurance that we can weather any economic shocks with confidence, just as we did with COVID, while continuing to invest in growth and continuing to pay a progressive dividend to our shareholders. Thank you for listening. Happy to take any questions.
That's great, Simon. Thank you very much indeed. So do we have any questions for Simon or for Lindsay? I've got one to start with. Kick us off. You described you had 9 labels. Am I right in thinking that each label produces a different type of programme? Is that right?
Broadly speaking, yes. So we have some in-house labels that we are factual, our drama department, our entertainment departments, and we've then either acquired or partnered with 6 other businesses in the last couple of years or so. Some of these are minority stakes, some of these are majority investments, some of these are wholly owned. It might be a revenue or profit share partnership, and we try to cover all the bases. So we've invested in a quiz specialist, for example, from the people that were behind Tipping Point and The Weakest Link, and they will make their next show with us. We've invested in a drama business with a lady who was behind creating Shetland for BBC One, which is just finished on BBC One. It's a very long run. Creating Vera, another long runner on ITV. She's making her next show with us, and it happens to be the £20 million plus Apple commission that we are filming right now in London. So we try to cover all bases. It's a bit like what you do with your investments. We spread our bets across a range of what we think are talented, creative individuals that are likely to deliver success to us.
Is there a programme type that's higher margin or lower margin typically?
Well, generally, the higher margin programming is the returning higher volume programming. So when you if you make a one-off show, you make a profit, but it's a slightly loveless thing because it doesn't come back and there isn't much future in it. If you make a show that can return and it comes back over several series, you have a franchise, you have something you can build on. If you're making more and more episodes each run, you get better and more efficient at making it. It becomes a bit more factory-like, although my creative partners would hate me describing it in that way. But it means that if you have a returning series at high volume, as we do now in 9 separate shows, we can deliver much higher margins. The highest margin of all is when you have a strong archive, a bank of 10, 20, 30 series of a show that you can then sell to buyers around the world. Believe it or not, Taggart remains a big seller, a big winner for us. And why? Because there's a murder in every episode, but also because we have 110 episodes. And we sell that around the world still, even though it's still in 16:9 and not even in HD. So it gets higher margin the more established and the higher volume that you deliver across those titles.
Any questions? Because I've got lots here, so I'm going to keep on going if Chris has judgment at the back here. And then we'll come to you next.
You seem to have a lot on your plate. Will you be self-financing or need to raise funds?
Well, currently, we don't need to raise funds. We did do a raise at the start of COVID to be sure and to make sure that we weren't caught in the event that no one really knew what was going to happen when the COVID hit. But we have a very strong balance sheet with a £60 million rolling credit facility, not roving, that makes it sound sexier. I also have our CFO here who's going to tell you how robust we are financially.
Yeah. I've not used a microphone since my karaoke days, which were not long-lived, I have to say. So in terms of balance sheet and flexibility, we've got a £60 million revolving credit facility. We also have a £20 million accordion attached to that we can call on as we need it. At the minute, or at the half year, our net debt was £6.5 million out of that total of 60 plus 20. So lots of capacity in terms of either investing in the business or cushion or buffer in what are some uncertain times at the minute.
And then a question at the front here from this chap.
Well, sorry, excuse my ignorance. Excuse my ignorance, but what is the population of Scotland?
About 5 million.
And a gentleman just towards the back here. Sorry, let me Chris has got him. Okay.
Well, following on from that fact, 5 million. Sorry. Can I ask you, if Scotland does achieve its independence, how would that affect STV? Presumably negative or opportunity?
We don't think so. I mean, first of all, it would be and continue to be a huge story which we would cover in some depth. So it'd be quite good for the ratings, I think. And you know, we have a news and current affairs team. We have a nightly current affairs show. We follow it, you know, in lots of detail. But we also have a very strong connection with our audience, and that is what is important. So, and a long-term licensing arrangement with government and with our regulator that would sustain post-independence. And why do I know that? Well, because ahead of the first independence referendum, the presiding government in the SNP committed to respecting those licences, and we would fully expect them to respect those licences in an independent Scotland should it happen after a second referendum. But we've got a business that is performing well in Scotland, but also performing well outside Scotland. So you can see the potential of the digital business now that we've expanded outside onto lots of different platforms. And television production, by definition, is global. So we see no ceiling there to the growth of that business, because you don't have to be a big global conglomerate to win a commission from Apple or one of the other big companies. So we don't see a particular threat from independence, but we will be covering it in some detail if it happens.
Yeah, please.
Yeah, just I want to understand you got the commission for Apple. I mean, what is the revenue model? Do they just pay you a one-off, or do you have resale rights, or do you get continuous revenue wherever it's showed somewhere else, or is it just a one-off £20 million payment and goodbye?
It's a really good question, because it differs depending on who commissions your show. So if the BBC and Channel 4 commission your show, you get paid for it, and we're able to deliver a production margin on that show, but we keep the international exploitation rights. So we can then take that format or that finished show and we can sell it around the world. So that speaks to a profitable but a slightly less profitable model than is required for a Netflix or a Disney or a Amazon deal or an Apple deal. Because what those guys want is a show that they can show to 100 countries simultaneously on day one. So what happens is they will typically pay you a production margin, but they'll also pay you an international buyout premium to buy out your ability to make money from that show internationally up front. So it swings and roundabouts. It's great that on day one, that show we know is more profitable than a typical show, and it will be a profitable show for us. But also you need to make sure you have a mix. If you just sold your shows to the global streamers, you wouldn't have any underlying IP that you could then exploit internationally. So we love working with them, and we want to continue to, because it's good business, but we need to have a mix as well.
Okay, just two small questions. One of the first slides you said, secure a new license. I didn't understand that. What new license are you trying to secure? And the last question would be to your finance person. I'm a long-term investor in STV from the original restructure when you were nearly down and out, but your spread is so wide. Are you doing anything to address the spread on your shares when you buy or sell?
Yeah, good question, and I'm glad you're a long-term holder, first of all. Sorry, first question was?
I saw on your slide you said
yes, the license.
Secure new license.
The license. Well, we are our broadcast business is licensed by Ofcom. We are licensed, like ITV is, with 10-year licenses, public service broadcasting licenses. Our current license runs until the end of 2024. There is then the ability to extend that, roll that over for a further 10-year period. The regulator has recommended that happens. It goes to the Secretary of State, a new Secretary of State now for Culture, who has the ability to block that. Feels very unlikely to us that she would do that. She confirms by the end of this year what her intentions are. We then apply formally for the license by the end of April next year for a new 10-year period from 2025 onwards.
No risk of somebody else taking it?
Highly unlikely. Famous last words, but we haven't seen that since the days of Thatcher when there was a tender, competitive tender, and that is not what the regulator has recommended this time. The second question on the spread, Lindsay?
Yeah, so we are, as you will experience with many small and mid-cap stocks, we are relatively lightly traded, and so we tend to see, particularly around closing auctions and the reversal the next day, some movements in the spreads, and so they widen at times and then they'll narrow back down, but it's a bit of a product of the lightly trading.
Lovely. With that, we are at time. So thank you very much indeed for the presentation. Thank you, Simon. Thank you, Lindsay.